Hello folks, I'm LA Little and this is your daily TA wrap. We take a look at these markets and we do it like no other. We do it from a neoclassical perspective, asking ourselves each day, what happened today and what does it tell us about tomorrow? You know, I do a show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. Folks, we had a mini crash. Nah, not a mini crash. We had a pretty good down day, though. It was relentless, so to speak. It started early and it kept going pretty much all day long. No relief whatsoever. Let's get the ending numbers up here and then let's take a look at what happened. So, another three, you know, what is this, like the third 300 down day I've seen? 326 today, 15,372 and 3/4. The S&P dropped 40 and 3/4, 1741, almost 740 to 1742. Composite down over 100, 107 points, 39, 96, 95. Index down 81 and a half, almost 30. 34.40 and a half, and the Russell, huge drop, 3.25% almost, 36.3 down to 1094 and a half. We had oil traded. You know, I didn't even watch oil today. I'd have to go over because these are after hours numbers. I know gold was up today about 20 bucks. The silver was up. Bonds were up big. Looks like they're still up. The dollar was actually down today about 1/3%. And, well, that's pretty much it. I guess that's enough, right? Let's look at the charts. You know, last night I talked about, you know, we were doing the weekly. And I talked about the fact that we had a situation where the risk was a lot more than the reward, and we kind of set that up with the potential ABCD structure, the potential bounce that could have developed. We were looking at it not so much on the S&Ps, but we were looking at it on some of the other indexes. The potential for a bounce to set up a nested, not a nested, but an ABCD structure to the upside, a little small one that would then set up the full ABCD bounce back down. Well, we didn't get any more up. It was down today. It was pretty much flat at the open and then just traded down the rest of the day. Volume expands, but you have to expect it to expand at this point. What's most important is what we also talked about last night, and I'm going to pull the weekly over, and that is, and let's do it this way so I can get to both of them, and that is that on the weekly, you know, on Friday last week, we created a swing point low, this swing point low. Once that was in place, you could actually get a faster move to the downside, and that's exactly what we got, right? Because when you break multiple swing points on multiple time frames, you know, clustered swing points, you can get the fast move down. Now, you know, it's still a ways away, but do recognize that if we get down here and we start breaking stuff on this support zone, it's going to be an issue because you got multiple swing points clustered on the same time frame, which happens to be the intermediate term time frame. And if we actually look over at the monthly, you know, the swing point low on the monthly is 1560. These are 1600. You'd have to get all the way back down into here. I guess it's probably this one. Yeah, that's the monthly one also. So a fast move off of those would actually threaten the monthly, and the monthly has not been threatened for 3 years. So we're a long way away from that still. that would be a heck of a correction if we get all the way down to there, before this is done. I think that's getting way ahead of ourselves to start thinking of that. But what we do have in front of us right now is we have breaks on multiple swing points. If this holds into Friday, that is a high probability you get 2 to 3 bars pull away. In other words, you would trade down even more. So if the bulls are going to make a stand, it's right in here somewhere that they got to get started, because you start losing this and it's going to get ugly. Now, what you do have already is an ABCD structure on the way down. Let's map that out again in case you missed it. It comes off the top, doesn't it? 1, 2, yeah. So off the top, down to this bottom, back up to here, and then down again. That structure measures another 1.5% or so. Measures down into the 1722 area, so somewhere down in this area. If we look at it on the weekly, where did my weekly go? Oh, there it is over there. If we look at it on the weekly, that's going to measure 1722. This is 29, and this zone here starts at 1709. So somewhere in this little area here is where it should break to, if it's going to fulfill it. Now, what may happen, and I think there's a good chance of it, and I'll flip back over to the daily and we'll see it more clearly. Matter of fact, let's just flip over to the others and use those. So let's go to the broad NASDAQ, for example. If we look here on the weekly, you got the same thing, but notice here, to break this, you'd have to come down to 39.11. That's another 100 points almost, but another 80 points, 85 points. But this is what I was going to show you. So you have the ABCD structure to the downside, measures from here to there and back up, back down, right? What could set up, and that measures to about right there. And so it's going to break another swing point on this time frame and get into the top of this bar. That's actually where it should measure. So somewhere into the top of this low. So that's a low there, the high of that low. That's from the November 7th bar. So that's where it's going to try to get. On the way down there, though, you could easily imagine, let me switch the colors, I'll switch to red. You could easily imagine a situation where you get another ABCD structure now from this price point back up, right, that would measure about the same or a little bit farther. And so you could see how you might get a move down into this area off of nested ABCD structures. If it gets back up as high as this bar, that would put it up here, and then it would be down to like maybe there, and they'd be out about the same price point. So don't be surprised if you see a 1 or 2 bar back the other way tomorrow or the next day, because when you get this kind of a flush, you've flushed out a lot of trades already. Buyers are going to come in again, right? And especially in this market that has been the infinite up. If you go back and look at over here, if we go back and look at the weekly, I mean, folks, yeah, we've seen little corrections before, but every time they happen, they come right back in and buy them, and they blow it up to new highs. I am certain people are going to think that again. I don't think they're going to stop. It's going to take more than one little 5% or down to stop the buyers. That's not going to stop them. As a matter of fact, 5% down probably looks like a buy to a lot of them. So I wouldn't be surprised to see some buys come in here, bounce this thing up, and then set up another ABCD structure inside the one that's already there. And when you get that, then you get a pretty good probability that it's actually going to go to the projections that are laid out. Let's look at the Russell. The Russell got creamed today. Now the Russell has a couple swing point lows, and it's already breaking them too. So this is the weekly, 1099. It gets underneath it today. So you break it on a weekly. You got another one a little bit lower, 1076. Let's go to the daily. So the daily's got the ABCD structure down as well. Let me see what that number looks like. So we closed today at 1094. Well, what was the low today? The low was 1091. So if I plug that into my spreadsheet over here, that's another 0.5% down. Now notice it's down here breaking multiple swing points as well. Let's see what that low is. 1096. Yeah, they broke them both. So the Russell, this is getting kind of interesting because I was just talking about the possibility of a decent bounce. Well, bounce may not last long, folks, because now you got multiple swing point breaks on multiple time frames. Right? You got two of them on this time frame, and you got the one over there on the weekly that we were just looking at, breaking as well. That should also lead to some more juice down. So maybe we get a little fast bounce and then we come at it again. But you know, this market is not set up too nice yet for anything sustainable to the upside. At least another percent and a half. The thing you always look at, the thing I've been talking about for a week and a half now, is that the structure of the market is what you want to realize, what you want to measure, you want to understand, because the structure will give you the reward risk scenario. And I ran through those reward risk last night. I can do it again real quickly here and before I move on, but essentially last night we can use this one. This one wasn't as good as the NASDAQ, but here was the potential, you know, for a little ABCD structure to get it higher, right, and then let this take over. It didn't happen, right? We didn't get it. Instead, we just came straight on down. You know, so now potential ABCD sets up here, right, which finishes out what this one's trying to do. So it's not something, you know, you got to be, if you're going to try to play something to the upside, you got to be kind of quick on your feet here. The better thing to do is simply wait for the better trade that's going to come. It will come when they wash it out. This low is, let me get the numbers here, 1079. So the target on that ABCD that's in place now is just above this low, and that's that same November 8th low that we were just looking at elsewhere. And those all have lows on them, and that's across multiple indexes. Let's go look at the sectors. The sectors got demolished. I haven't even looked at them, so let's look at them together real quick and see what they look like. All right, we'll start with the IYT and we'll just run through them real quick. I'm going to have the weeklies up as well, so because I want to see how close they are to breaking on these. 126 on the weekly is the break, and we're almost there. So, and that's going to break multiple swing points as well. Volume's coming out of this one. Okay, so that's not a good scene. That's another potential juicer. The weekly on the SMHs, 40.19, we're right there again. So this one's within distance as well. And on the daily, you're already breaking multiples. I mean, look at them all down here, folks. I mean, these are problems, right? I mean, I knew the structure was bad, but there's a swing point here, swing point there. Just broke that one and this one. So you just broke two. You got two more to go. This is, and you know, you got your ABCD structure in place that plays out farther. If they don't get a bounce tomorrow, we're going to see a real flush. That's the way this looks on the first two I've looked at. Let's see what the rest of them look like. XLB, you got to get a bounce here to keep it from just totally flushing. Okay, so the XLB's already broke on the weekly. And on the daily, multiples again. Yeah, multiple swing point lows broken. 3 of them this time. 1, 2, 3. All of them. Volume expands. I don't see how that lifts very much, if any. So that's 2 of them when I had straight lower. XLE. Well, it had already broken. Now it's coming after the next one. And XLE will be the first one, because it's the weakest, will be the first to go to bearish on the intermediate term time frame if it breaks here. 81.31, and we're at 82, so that's far enough away it may not happen. ABCD structure here. Let me see if I have those. I didn't map those out, I don't think. I didn't. Let's quickly just do the numbers. So let me pop over to my sectors and XLE, and let's pop the numbers in right quick. So that, because I want to see if it would break. 87.22. 1, 2, yeah, that one. 83.44. Back up is 84.49, 84.91. So that one measures to 81.23. And what did we say the weekly was? Right at it. That would break it. Or it would go down and test it. Doesn't have to break it, but it definitely would get down there and test it. So that's another, percent lower, and it can certainly get there. But that one doesn't quite look like it's going to break yet. Let's look at the next one, XLF. Okay, so financials, industrials, those were the strong ones on the way up. So it's important to watch your strong ones to see what they do. So this is this the first time back for the retest? It looks like it is. 2093, it is. So this is the first time back to do a retest, regenerate off this swing point high. And so far, it's holding on the weekly. But it's hitting it with much more volume. Yeah. The swing point lows are clustered together, but it's going to be hard to get down there and break those. This one is going to, the real key here is, can it hold the swing point high? I mean, the retest regen off that high. Let's see what the daily looks like. So ABCD structure here, and that one is actually measures from the top down. 2216. Let me throw the numbers in as I go. 2216 and 2086. 2135. That measures the 2010 going back to the weekly. That will definitely break that, and it won't get down there though. Okay, so yeah, damage, but not terrible. But this one could actually bounce now. I mean, this one could get a bounce. So there's like three of 6 so far that could bounce. XLI was the other strongest one, and that one's breaking on the weekly. 49.13. It's already broke. The volume's going to be there too on the weekly. Oh man, this is nasty. So you got 3 swing point lows that all break on this one move here. This one's going lower, so that's 3 so far. They're going to try to go lower tomorrow. So if we get a bounce, it's going to be a fast one, and it's going to be over before you know it. XLK. Okay, it's going to go after its swing point low, and it's within distance. That one will also break, and it's about to break multiple swing points. 2 more here, right? So one here, and you're going to break on the weekly. That can lead to a faster move as well. I don't see anything good other than a small, fast bounce. XLP on the weekly. Now this is a bad setup if you want to look at something bad on a weekly. You got 3 clustered together all within the same price zone. When it gets down there, that's going to be heck to pay. And this is just bleeding lower. There's no help for that one. There's no way to tell when that one's going to bounce, because you don't even have structures to measure from. You have a range trade breakout, I guess. That's the best you could try to measure with. From about there, and it's already finished it. So who knows where that one will stop. XLU, this one was trying to go higher, but of course it couldn't go anywhere either on the weekly. Still trying to get to the highs, so it fell at the highs. Has volume. That one will come back. That one will bounce again, which is probably not good for the market, since that's been where money's been flowing, because of fear. XLV coming back on the weekly. That's the strongest one right now. And this one is about to break. 5503. And it's hitting it with, it's not as much volume. So we may get a bounce out of this one tomorrow. So that's two that looks like they may bounce. Three look like they're definitely going lower. Let's look at the final one here, consumer discretionary, which has been totally beat up. And this one also has two swing points down here together on the weekly. Has already broken. And yeah, I don't see. That's an ABCD down from here. Let me put those numbers in. How much farther will this one go? Because this one has been bleeding badly. XLY is from that price point, 65.92, down to this one is 62.72, and then back up 63.89, 63.91. So that measures down to 60.81. We're almost there. So this one's about done. So a little bounce here as well. So you're going to have more pressure than you're going to have bounce. But there is the potential for the bounce. At least the sectors seem to suggest that. And it does seem like from the two of the indexes that you could get it too. Let's go look at the OX markets and see if there's any indication of a bounce there. And the reason I'm looking for the bounce is, well, if you bought today, which was a possibility at the close, right? The bounce is what you're going to trade off of in the morning, get out, and probably flip around, try to short it. And so what you want to understand is what's the probability of that bounce bouncing very far if you're going to try to short more, right? And, you know, and now you're getting down to where there's not a lot left, so you got to be pretty careful about your entry if you're going to enter. Where's my I want to go to dollar first and see what it's doing. So dollar couldn't move, couldn't get over the highs. You got ECB, BOE, Australian dollar tomorrow. All of them have rate decisions this week. Looks like the dollar is going to be hung here until those are over. Let's go see what the bonds did. I know they broke higher. Another full tick today. Did they get over the highs? 108.73. And they did. They closed over it as well. So the next price point is, the next one is 109.69, and not that far away. So it looks to me like that's the target, and it is going to get there. I was wondering if it would be able to get over that price area. Wrong tool. Let's get the right one. I was wondering if they'd be able to get over this one. Well, they certainly did. Right, the bottom of this big wide price spread bar. So now you've got another swing point high, which is the top of this anchored resistance. It's going for it. Looks to me like it's going to try to get there right away. And boy, if it gets over it, then you really kind of have these two bars left. And after that, you got a long way to go. And after this straight up move, makes it kind of hard to believe it's going to continue straight up that way. So bonds are pretty stretched here. And that's on the weekly. Let's look on the daily. I suspect it looks just the same. The volume's coming into them still, and you're just getting one after another ABCD structures on the way up. I mean, they're just printing over and over, right? That one just completed today. Inside that one, no, you don't have one inside. So that actually just finished today. Yeah, so that would suggest another attempt to pull back here, which would support the little bounce idea. Let me see if the what the gold market did. Gold was up pretty big today, and so on the weekly it doesn't really look like anything, and no volume as it comes back up. So gold doesn't look like it's going to make the run. And I also saw the gold stocks turning around today at the end of the day. So it looks to me like this one is also kind of stuck and going to try to drift back in. So the OX markets also support the idea of some sort of a small bounce. Okay, now that we know that, if you don't mind, let me go quickly back over and see what that bounce may look like using a different chart. So let's pop up, where's it at? Here we go. So let's go intraday on this. I'm on the S&P 500, and I'm going to put it on, like, matter of fact, I'm going to go to the SPY and put it on, we'll put it on 15 minutes to start with, just to see. It's not going to tell us anything. Let's go to 30. Alright. Okay, so the breakdown area is 177. We're at 174. You can't expect it to get that far, probably. So let's look closer at a shorter graph. And here you got 176.50 is the wide price spread bar. Okay, so this has been doing ABCDs down as well today, right? So you had one here, right, that traded to there and back down, and that actually completed at the close. And now you've got another one that just set up, right, that could get you down into this area, which is about 173. But actually you got a 2-bar reversal right here at the end of the day. That looks like it is going to bounce. And so where can it bounce to? It looks to me like about as much as you could expect would be here. 175.75. So $1.40, that'd be $14 right on the S&P. $14 on the S&P. Let me go back to it real quick. And then if you got questions, I'll try to take on what time I have. SPX, one last look here on the daily. So the bottom of this bar, 1760. That's probably as much as you can expect. I doubt you'll get back to this one, 1768. Let me see what you got over here. Nothing over here? Okay, let me try to wrap this up then. The markets have come down hard and fast, right? I've been talking about the risk at least a week and a half. I know I've been talking about it with my members because we started talking about it at the end of December. We positioned to try to get out of the way of the danger that was coming, right? And then as the structure began to really set up about 2 weeks ago, you know, we lightened up quite a bit, and I've talked about it here on the show and certainly in my articles. Hopefully you read my articles as well. If you don't, it would probably be useful because there are articles that have printed. In particular, this one, for example, the bull markets die hard, but is the bottom about to drop out of it? You know, the market suggests a significantly lower move. These things, you know, they were telling you a week ago, danger was there, right? And if you didn't prepare for it, well, then you get caught in it. Hopefully, you prepare for it, and you're in a position to take advantage of it. How do you take advantage of it? The first trade is always the easy one. So in other words, when you flush out on something like today, end of the day, we came in and bought, expecting that bounce, right? We'll be out of that before it's time for you to even do anything, though, if you didn't buy it today. So don't go in the morning and start buying it on an up morning. You're going to want to sell into that. What you're looking for is where this thing's going to trade back up to. It looks like it can trade maybe 10, 15 points higher on the S&P as a measure, but then expect this thing to come right back at you. That would potentially, that may take 2 days and set up another nested ABCD structure to take it down to the original break, right? So I would suggest, you know, if one's trying to trade this thing, what I would be suggesting you do is just be, you know, if you're not fast on your feet, then just wait. Don't try to go in here and, you know, buy a bounce tomorrow or short the bounce tomorrow. There's not that much left in it. I see a question over here, do I think it gets lower in 1722? 1722 is the target. It doesn't have to stop at 1722. If you go back and look at the weekly, right, that zone is 1709. It starts at 1709. right? The bottom of that zone is 1687. We could trade that low. There's nothing that says it has to stop at the target. Matter of fact, it may come down to that 1722, get another bounce and set up another ABCD over the next week to take it lower. Right? These things can just continue, just like we just saw the bonds continue to the upside. So, do I think it's going to go under 1722 tomorrow? No, I don't. I'm pretty sure it's not. Not after the bleed today. Yeah, if it goes down there tomorrow, it's probably a buy. But if it takes it 3 or 4 days to get there, it's a different picture, right? When this thing went sideways 4 or 5 days, it changes the picture, right? We were looking for a bounce, but it never came, and the longer you bleed and just hang and can't lift, the higher your probabilities are that whatever that is that's going on, which is on the way down, is probably going to continue. So, please view it in the context of time. Time is so important when you're trading. How fast things move or how slow they move makes a big difference in what comes next. Folks, thanks for dropping in. Thanks for listening. I believe that I do a great service to you. I tell you what I see. I give you information that you can use that's actionable. Neoclassical gives you good reads. You just have to be willing to look at the market a little bit differently, to read the tape, to read the clues that are given to you. It takes a while. It takes a while to shift out of all that stuff you've been taught into something different. But it's very useful. It allows you to stay out of trouble. It allows you to look at the market from a reward-risk perspective and a probability success or failure. And that's what you need when you're trading. Tell a friend, tell two. Let me help you. Take care, folks. Thanks a lot. And I'll see you next time. Good night.